Okay.
Hi, I'm Ren. I'm an engineer at Electro Capital, and today we're going to be talking about some trends in crypto from VC and more from an investing perspective in terms of following developers within the crypto industry. I'll let the others have a chance to introduce themselves, maybe try and keep it to 30 seconds each.
Thank you, Ren. Hi, I'm Solene, principal at Borderless Capital. Borderless invests in mostly crypto infrastructure and also a lot in DeepIn.
Hello everyone, James, founder and CEO of DFG. So we are a crypto investment firm. So I started the company back to 2015. So we right now manage $1 billion. So we are a long-term believer for crypto.
Hi there, I'm Felix, partner at Greenfield Capital. We are a European crypto fund, 135 million euros in our latest fund, and we invest across DeFi, infrastructure, and consumer within crypto.
Great, thanks. So I thought maybe a good place to start, given the approval of the BTC ETF and the strength of the inflows into the ETF over the past few weeks that we've seen, maybe we can start with talking about the impact of mainstream capital entering crypto. I know, James, you spend a lot of time looking at public markets and liquid markets in crypto, so would you mind maybe starting us off with your take on the impact of mainstream capital entering crypto?
Sure, thanks for the question. So I feel like the ETF approval is pretty big because right now we have the approved guiding in January. Right now it's the end of February. We already have more than $7 billion flowing into the Bitcoin ETF. People are seeing that the Grayscale Bitcoin ETF is selling the tokens. Well, that doesn't necessarily saying that the GBTC holder is selling. Maybe they just want to selling GBTC and exchange for IBIT, right? They are looking for like a lower management fee for that because GBTC is 1.5%, the other is like a 0.2, 0.3%. So they are just looking for lower fees. So the net inflow for Bitcoin ETF right now, probably less than 2 months, is more than $7 billion. So I think this is way better data than gold ETF. So which means that the mainstream capital is very bullish on Bitcoin. And we will have also the deadline for a certain ETF in May, right? So that will also trigger some more capital flowing to the crypto space and trying to buying Ether, basically. So we will see overall, I guess my prediction will be somewhere between $30 to $40 billion coming to the industry this year and buying Bitcoin or Ether. So this is actually pretty important data because we are not just counting on the capital in the crypto industry to trigger the bull market, right? So we also have much more mainstream capital coming to the industry to buy these mainstream assets. So this is actually very important to the industry.
From the builder perspective, have any of you seen builders thinking about building projects in a different way on kind of the assumption that more and more mainstream capital and TradFi rails get built out around crypto? Curious if either Felix or Solene, you've seen cases where builders are thinking a little bit differently about the types of products that they're taking to market.
I think generally builders just maybe to some extent expect prices to increase and therefore also like whenever we see crypto prices increase and kind of the market sentiment turning more bullish, we see DeFi yields increase based on increased leverage. And I think like one of the big opportunities here and what I'm seeing projects building towards is like building much simpler UX for kind of new DeFi users. And as basically there is much more mainstream attention again on crypto since like the Bitcoin ETF I think heavily legitimizes the industry actually, and maybe an Ethereum ETF coming up, and that I think that draws in a lot more attention and then should I think also trickle down towards kind of more crypto native products.
Yeah, I agree. I think now they know that they can go beyond just the crypto audience. So knowing like from a communication perspective, how can you actually like expand your project to a more traditional mainstream retail that is now coming back. We're still not at that stage of the curve. Right? I had a couple conversations during ETHDenver. It's like, are your normie friends calling you back yet? Some said yes, some said no. But it's also some companies going towards not only crypto VCs, depending on what they're building, and being a little bit less shy about splitting their cap table between crypto VCs and also VCs that might be tackling whatever category they're doing. So overall, it's very good for the market. I think it's reaching the next kind of stage. We definitely need to be careful about valuations, as like a lot of capital is coming again, and making sure that we stay like humble and focus on development. But overall, it's good to have that validation and that stamp from the bigger guys. So yeah.
Switching gears a bit and thinking about as more and more users enter the crypto space. Today we have Ethereum's layer 2s. We have many layer 1 networks competing with Ethereum and smart contract chains as well. Kind of curious to hear your take on how that competitive dynamic might shake out, and how the cross-chain type of ecosystem that we have today might play out.
Yeah, I think I guess there's a lot of debate around two different kind of visions towards how to scale, like the modular thesis with many layer 2s coming up, app chains in the Cosmos ecosystem, I guess other ecosystem also having like their, I guess, different technology stack with like multiple parallel kind of separate chains, and then like the monolithic or integrated stack. And I think one of the major trade-offs and one of the kind of, I think, big advantages of public blockchains or of Ethereum generally is composability, and we are sacrificing that with the L2 ecosystem currently. And I guess that would speak more for like the integrated stack, making it much easier for developers to build composable applications that build on top of each other, and I think that's really the superpower. However, I think more recently there's a lot of buzz in developer circles around shared sequencing, where basically it should be possible to have synchronous composability across layer 2s, and kind of reducing that trade-off to some extent. And I think another very interesting trend is chain abstraction, where basically you could, as a user, you could have like one account on a chain that then opens you up access to multiple different chains, and as an end user you don't really need to know which chain you're interacting with, and maybe there's like some curation layer of like what are the chains that have like sufficient like trust guarantees for that specific end user, and then using intent infrastructure to basically, so users only need to sign messages about what they want to do, and then you have solver networks also across chains serving the user in an automated way, giving, and like those solvers competing even and giving like the best deals and execution across different chains and layer 2s. And I think, yeah, I'm excited about that, and I guess we need to see how that plays out.
Yeah, I think I totally agree with you. And I think cross-chain is actually pretty important, because we have all the different layer 1 protocol here trying to basically solving the scalability issues. I say I'm fast, I'm secure, which is great, but it caused a problem is like the liquidity is a little bit isolated here. Of course, Ethereum is still dominant market. The TVL for Ethereum is around like $53 billion, but you still have more than $30 billion TVL elsewhere in Solana, in Avalanche, in all these kind of layer 1 protocols. And we can see liquidity, once liquidity become isolated, then it created a problem about, if you don't solve the cross-chain, then it would be a big problem. Basically, I just want to buy a Solana NFT, then, or I just want to trade on a DEX in Avalanche or whatever. That is, liquidity is not good enough. If you aggregate all the liquidity together, it will be a much more efficient market. So that's why cross-chain solution is here. And also we can see a lot of big projects related to cross-chain haven't get listed, right? Wormhole, Layer 0, they are not listed. But I calculate a little bit about the market cap about listed token of cross-chain solution, somewhere only like a little bit more than $4 billion. So that's way too small for me. We should have a market with a market cap more than probably at least $20-30 billion for cross-chain, could be bigger. So that is actually what I see is really cross-chain have a really good kind of potential to grow in the future. As DFG also investing into some of the cross-chain solution like Zeta Chain, just getting this on Coinbase and OKX, we are definitely looking for more good, cross-chain solutions to invest.
Yeah, I agree with you both and love that question. More or less, like the thesis for this year is very much focused on cross-chain infrastructure. We do believe that fragmentation is a massive issue, and each blockchain, whether they're layer 1s, layer 2s, they all have, the advantages and their challenges. And I think there is beauty in being able to aggregate the liquidity as well as the users and having a more seamless experience. And so, as James mentioned, there is a lot of tools, a cross-chain messaging protocol and bridges that have gone through kind of the cycles of and being more robust right now. So there is a massive opportunity. So Borderless, we have a strong partnership with Wormhole, and it's really helping a lot of existing companies as well as new companies kind of thinking about how can they expand. So they might start with one ecosystem, and then they want to broaden horizon to unlock different features or having more users. And then there's also solutions that enable better cross-chain infrastructure. So just to give a couple examples, one would be Movement Labs. You guys might have gone to Modular Day. That happened a couple days ago here. And so they enable to code using the Move language on different blockchains. So it's a network of Move blockchains, and they have also different things like shared sequencer, et cetera. And then another example would be Noble Assets, which enables to bring liquidity directly, native USDC on Cosmos, which has been like a big step for the Cosmos ecosystem. So they have more than 150 million USDC on Cosmos right now. And so solutions like that really help kind of aggregating all different ecosystems together, we think are very important. And then we'll see long-term what sticks most. But as of today, is how can we be stronger as a crypto ecosystem in general?
Thanks. Another point, maybe also related to the topic of fragmentation, is also the fragmentation and diversification of both crypto users and developers, not only within the US, but abroad. I'm a bit curious to hear your take on what is the difference in terms of the crypto industries within your respective regions. It's quite rare because we have representation from Europe, from Asia, from the US. So maybe providing a different perspective to the builders and developers and founders out there about some insights from your respective regions that they might not necessarily hear day to day.
Yeah, I mean, generally we've seen actually a lot of developer influx in Europe from the US specifically, especially Southern Europe. Like I'm based in Lisbon, for example, like kind of generally as a fund, we're kind of spread out all over Europe, Eastern Europe as well, specifically. Traditionally, there was like Berlin has been a pretty strong hotspot, Paris as well. I think like Berlin specifically, like being very strong in terms of privacy and having like that ethos based also kind of from like, I guess the older days of like spies and kind of protecting against surveillance. And generally, I guess Europe it's a very important value also being reflected in regulation in the GDPR for data protection. And I guess maybe that's also one reason why Europe has been lagging a little bit in terms of tech traditionally compared to the US, because Europeans are a bit more concerned about data privacy. And I think with crypto, we do have a chance basically to have like these like distributed organizations that are basically built in many spots at the same time versus like having like this one center that was Silicon Valley for tech. And yeah, I think it's a big chance for Europe, and also with MiCA regulation. I think it's a step in the right direction to have uniform regulation in Europe at least, and that's one of the big, like we did a survey, for example, across builders last year, and the number one barrier that was being mentioned is regulatory uncertainty. And I think, yeah, if we have regulatory certainty or more regulatory certainty, then a lot more builders are actually willing to take the leap, I think, and also corporates and institutions, and that, yeah, I think that will be a big enabler.
Yeah, I think we're in an open, decentralized world. So basically, crypto, every project, all the investors, people are doing crypto adoptions everywhere in every country. But I think on like a marketing perspective, if you are being localized enough in one country, then you just can do great adoption in this country. It will definitely benefit the project as well as the whole industry. I just give you an example of one of our portfolio called R-Star. So the founder is Japanese. It is basically, I would say probably the blockchain of Japan. So that's what they defend themselves. So the founder, I saw actually his giving a speech at Japan, in Japanese, which I don't understand what he's saying, but I can feel the passion about it and how Japanese people love R-Star. So that's one great example is, if you really, if you're a project, then make sure that, you are going to be focused on the jurisdiction that you are good at. Just do marketing and do adoption. That's going to benefit your project. Then later on, once you have a solid foundation, I guess you can try to expand and go to other jurisdictions and do more adoption there. So I think that would be a good kind of marketing strategy. And that's also my advice to the project. Just make sure you have a solid base, then you can expand.
Yeah, on our side, I think so more than 50% of Borderless's investment are abroad. So we have a very strong base in Latin America. David Garcia, the co-founder, is also co-founder of Ripio, which is the Coinbase of Latam, if we want. And so it's interesting because I realized talking to a lot of people that there's a lot of very, very powerful projects in that region that might not be known from like a US perspective. I think this is going to keep going. We could see a lot of companies but before thought they had to go to Silicon Valley or to the US to actually find funding, and now you see reverse. It's like actually VCs begging to have access to places like Latam, like India. We have a great team in the audience, actually. They're building on the data side. Coming from there. So I think it's definitely important to have, that communication in person and have that part of like the travel. But yeah, we're seeing a lot of that, more acceptance in those regions. And Asia also, obviously, Hong Kong and all of those places, the regulations are friendlier and friendlier. But I think there's big shifts, especially, Argentina, there was one of the most watched speech at Davos this year, and really dabbling down on those markets that we've seen for a long time that had this high potential due to just how big the population is and the problem that they have with inflation, etc., and how fast people can adopt new technologies. But I think this year with all the new regulations, it's actually really having a true change. So yeah, from our side, we're really trying to expand, double down on the zones and location that we actually have access to, and trying to have that engage, that dialogue with also a team in the US that might want to expand in those regions to help them actually have offices there, etc.
Yeah, that makes sense. I want to spend maybe the rest of the panel talking about some of the areas that you all think are coming next. So whether it's something like DePIN, crypto AI, BTCL2s, maybe what's one area that you're looking into currently, or you think will be the next wave of either on the protocol side, the infrastructure side, or the application side for this year, next year, and the year after?
I can start, I guess. I briefly touched upon it earlier. I think one big enabler for better user experience and also actually bringing new or like better business models towards interfaces and aggregators is intense. Where yeah, we have been investing in that segment, looking further into it. Basically, where I guess there's a big opportunity. I think that like currently there's a lot of I guess value being leaked to the infrastructure layer, to the layer ones through kind of MEV and like block space is kind of increasingly built up for, and if you can have like order flow auctions and similar things like that at the solver layer, kind of towards the front ends and interface and aggregators, then you can return actually much more of that value towards the end user, and I think aggregators can capture some of that value, and like overall, I would say like we're building, or I guess from the get-go, we're kind of committed to building DeFi as a new financial system that's more resilient, that's more transparent. You can verify inputs and outputs in a much clearer way. That's to reduce counterparty risk, systemic risk in general. And so far, we've seen some real-world assets being onboarded onto crypto rails. But I think that will be, for me personally, that's like the end game. That we basically represent real-world assets to a much greater extent on-chain and leverage that infrastructure that has been built over the years and that is continued to be built ultimately to provide a lower cost of capital to businesses and better risk-adjusted returns to investors based on just the efficiency gains, more transparency, automation, lower counterparty risk, what I mentioned. And yeah, that's one of the segments that we're investing.
Yeah, I think overall speaking, we have a pretty healthy competition here. With the new narrative about DePIN and AI become very popular, it actually forced some of the mainstream projects belongs to so-called old narratives make a lot of positive change. For example, we see MakerDAO using the treasury to buy back the tokens. We also see recently the Uniswap deploying really, actually share their protocol fees to all the token holders when they do staking. So actually, I'm not sure whether if we don't have this kind of new narrative, then the capital don't flow into them. Maybe it will at least not that quick for this kind of mainstream project to make this positive change. So overall speaking, I think we are in a pretty healthy competition models. I'm pretty sure in the next kind of, this year or probably next year, we will see also the growth about the old narrative, so-called old narrative like DeFi, because they're making positive change. Also NFT and gaming as well. Taking NFT as an example, there's one company we invest called Peggy Penguins. They do very, very good kind of adoptions. And Bored Ape seems to me a little bit stuck there. So then, it refers to the secondary market. Then, the price per Peggy Penguin is just flipped Bored Ape like a month ago. So that's actually, it's actually, about old narrative like DeFi, gaming, NFT, these kind of things. You need to have either innovation or making positive change for this to grow, right? So with the new narrative pushing you for that, I will pretty much sure we will still see the growth of this old narrative. With the new narrative beyond the DePIN and AI, I think there could be something we may not even think about that right now then could become super popular like 6 months later. We just don't know about it. I'm thinking about whether we can put in, for example, like biotech data on chain or things like that, right? So it should be something that people haven't think about and which probably are not entirely bullshit, right? And then this could be the potential next narrative, but I'm not just sure about what that is, but I'm pretty sure there will be a new narrative beyond DePIN and AI as well.
To double down on DePIN, I think is really interesting because of the launch of Helium Mobile this year that has really kind of made a big splash, and now you can get this like $5 plan in the US, which is unseen, and that's really breakthrough innovation in the telecom space. Deepin is something that's helping going back to mainstream adoption and what is the capital and just the acceptance of mainstream going to do. I think this is something that's very easy to understand for people. It's not easy in terms of the application and how do you create the tokenomics, etc. They've gone through a lot of iteration and the meet and burn, this equilibrium for different companies that they have to think about that very deeply before launching a Deepin project. So when you look at, some of whether it's Hive Mapper or Helium, it's like how do you think about deploying different hotspots or different devices in different locations, and how do you make sure that there's not too much in one location and then you have an oversupply in one location and you need to give all those tokens and then there's all those problems. All of that is being thought through very deeply right now, and this is making like breakthrough changes. There's so many other interesting application, decentralized GNNS for geolocation, flight trackers, and yeah, a lot of them that we don't even think about that are very industry specific. Something else that is going to take longer, but FHE, like fully homomorphic encryption, is something that we're looking at. We think it's still quite early, and we're learning in that category, but that's quite interesting. Also, development on the privacy side with more evolution on the ZK side. That's something that's quite interesting. And then, there's always we don't know what we don't know, and there's always a narrative that pops up and that's taking all over Twitter or X that we never thought about before. So that's good that we're going to have that.
To dig a bit deeper, so crypto as an industry oftentimes gravitates towards things that are net new. We always have these new narratives that always seem to take the industry by storm. When thinking much longer term, sometimes it's easier to think about the aspects of either human psychology or the industry or the underlying technology that are invariant. So what might be some aspects of crypto, whether it's user behavior, whether it's something about the underlying blockchain technologies that you think will not change, or that type of behavior will not change over 5-10 years?
I touched upon it briefly. I think what will not change is that investors will always want to optimize risk-adjusted returns, and businesses will always want to raise capital at the lowest cost of capital and as fast as possible. And I think DeFi ultimately can optimize that and bring different parties together on a global marketplace. And maybe one more thing in that respect, and also relating to privacy, what you mentioned, I think compliance is a really important puzzle piece, and we have been investing in that segment as well. But I think it's super important that we still kind of can square that with privacy as far as possible. And I think privacy is important for everyone, but I think especially for businesses and institutions, it's super important because you don't want to reveal all your activity on chain to your competitors, and I think that's also not going to change. And I really like the quote, "Privacy tech is collaboration tech," because if you can keep your data private but still kind of prove certain aspects about what you're willing to do, or even contribute to privacy preserving machine learning, that's super powerful, I think.
Yeah, I think overall speaking, the innovation is the only thing that I think won't change in the crypto industry, because the industry changed so fast. And if you do very good in the last bull run, it doesn't make any, if you get stuck there and relying on what you have achieved, then you probably won't do anything good in the next bull run, right? So this is really important, because innovation always happens in this industry. So you just cannot stop building, not stop thinking about new things to build and problems to solve. I think that's the beauty of the industry.
Nothing specific to add. It was quite complete.
Maybe the second last topic. When there's obviously a lot happening in crypto, a lot of different sectors and areas that builders are building for, what are some of the ways that you keep on top of developers in terms of following developers, where development activity is going, and just trying to hone in different areas that you want to spend time on?
We're definitely grateful for Electric Capital's reports, first of all. And I think it's just having ongoing conversations with portfolio companies. They're the best reporters of what's going on in different ecosystems from a tech perspective and also a political perspective, because there's always some of that, you know, in terms of the tech. The one thing that might not change is also, yeah, the fact that there's always, as in any industry, any company, there's always some political aspect, but that's also the beauty of open source. There's always room for change on that side. And so, yeah, I think having, you know, making sure you have enough bandwidth, whether it's a person internally that's wearing the platform hat in terms of the platform role, so portfolio management, or having one of the partners in charge, making sure they allocate that time is very, very important. And yeah, all the best information we have is really from the portfolio companies. So there's obviously on-chain data, and you can look at doing dashboard, et cetera, to just have kind of raw data. And then to kind of understand a little bit more in terms of the depth is just having this kind of off-the-record conversation with builders and also protocols. So we're lucky at Borderless to collaborate with so many protocols that actually invest in funds and that we invested in the ecosystem, whether it's, you know, anything from Aptos, Polygon, Monad, I mentioned Move earlier, and so kind of having that, and also talking to other fellow VC firms that we do a lot of collaboration with, and sharing those perspectives on what they're seeing on their side on different parts of the world. So I think just like communication is key, and everything that, you know, you should keep the best deals for yourself, and that once you put a check in the company, that's it, and hope it's going to 10x or 100x or 1000x. It's just key for success is really communication plays a big part.
Yeah, I totally agree. For us, I mean, we also want to make sure we use all the product. So once we have, you know, use of the product, we know definitely the update, and also what things to improve, what things are already being good. And our, you know, I'm not a tech background, but our CTO, you know, he do a lot of due diligence on the GitHub account, you know, check the update of GitHub. You know, that's also important. I learned a lot from him. Yeah, I think just like being more practical and using the product, check the code is really the most realistic ways for you to learn more information. And also, as you mentioned, that, you know, talking to different people, talking to different VCs, different builders also help us a lot, help us learn a lot about the new ideas, new narrative, new thinkings about industry. So yeah, on one hand, I think just stay at home, do more due diligence using the product. On the other hand, just go out, talk to more people. I think both strategies are actually very useful for getting new info.
Yeah, I will just very briefly comment. Also, portfolio founders, they make the best introductions usually, and like events like ETHDenver, they're super cool, like immersing yourself with developers, like talking to hackers, and I guess you can do your research online, but like I guess just randomly stumbling into some interesting people at a conference also is always good.
Great. We have 1 minute left for the folks who stuck around for the whole panel. Definitely appreciate it. Maybe in 15 seconds each, what's one contrarian or spicy take to end the panel on?
Just hold.
I think we need better governance in crypto that goes beyond code is law and token holder voting and multisigs. And I think, yeah, having, like, we have invested into one project called Q that does arbitration rooted in international private law, where you can have basically nuanced judgment for overseeing governance and providing shared governance security. And I think, yeah, that's going to be a big unlock to bring the credibility for mainstream adoption.
Yeah, on our side, just the big bet that we're making on interoperability could sometimes be seen as contrarian. Usually it's kind of pick your ecosystem, or at least a couple of them. We're staying pretty agnostic, so that could be seen contrarian. Yeah.
Great, thanks. Thank you, panelists, for your time today. Definitely not easy to take 35 minutes out of the busy conference week. So definitely appreciate it. Thank you.
Thank you.
Thank you.
Thank you.